So 2 dividend stocks that you should seriously look at adding to your portfolio coming into 2021. 2020 was a crazy year for many reasons that we all hate, but it actually was really bad and tough for dividend style investors. In fact, many dividend stocks in the oil sector, the finance sectors, your typical strong dividend sectors have actually slashed or even cut completely their dividend payouts for the last year. So these 2 stocks that I'm going to mention in this video have actually done very, very well and will continue paying their dividend. And more importantly, they've been increasing their dividend over a long time. So if you want to know what these 2 stocks are, stick around after this. It's 2 Stock Tuesday. So before we get into the video, as usual, if you are new here, please do hit that subscribe button and turn on the bell. Seems bells are in Christmas theme, and seems it is Christmas. As promised, I'm wearing a different Christmas jumper. On that, my wife thinks I have a Rudolph fetish. I own 15 Christmas jumpers, and 13 of them are Rudolph, and one of them is a freeway, with Rudolph basically participating in the middle of a gangbang. Maybe she's right. Of course, make sure that like button is smashed, and if you want to support the channel, please do check out the Patreon links in the description. You can get some exclusive perks, including our exclusive WhatsApp group, where you can actually message me directly and get a response on stocks, tickers, and more importantly, see my portfolio. If you want to join the chat room for lifetime and you're not from Canada or US, you can check out the pinned comment. There's eTORO down there. If you sign up, deposit, make 1 trade, you get free lifetime access to the chat room, and you can again see the perks for the chat room on the Patreon links too. So one last thing I want to self-promote is on Christmas Eve at 10:30 Eastern or 3:30 UK time, I'll be doing a live stream on YouTube. I haven't done this in a long time, and my videos hopefully have got a lot better since then. So if you want to come and hang out, drop me some questions there. Anything goes, but the main subjects are going to be the EV sector for next year. But if you want to come and just join in the fun, please do put a bell reminder or it's something in your calendar. I'll be coming on Christmas Eve, 10:30 Eastern time, 3:30 UK time. So dividend stocks. Dividend stocks have been very, very popular in YouTube, and actually the new generation of investors coming through want to learn more and more on dividend stocks. I see videos from all my favorite YouTubers actually talking more and more on dividends. So it seems to be a big popular theme, but historically, a dividend basically means that you invest into a company, let's say it's BP. BP every single quarter will pay you a percentage of the profit margin back to you as an investor, and then you can take it out, do what you need to do with it, stay invested in BP, and then next quarter you get another percentage chunk. So it's better than sort of buying an apartment and then you have to manage it, pay maintenance and stuff like that. It's a way of keeping people invested in that company, which is good long-term. Apple, BP, all these companies tend to have this sort of method where they want to lock investors in for a long time, because then the stock price doesn't fluctuate as much. It makes sense. But I think dividend stocks have been very, very popular quite simply because people can just sit at home and earn extra income. And if you have a decent amount of money in your stock portfolio over time, you can actually sit back and completely retire and just take these dividend incomes. But that said, 2020 has been crazy. If you sat back in 2019 and aim to retire in 2020, you probably couldn't. Most companies actually cut their dividend, slashed them, or did something to their dividend in the last year. In fact, all the banks in the UK were forced to stop dividend payments. As a little example, we've seen lots of oil companies slash their dividend, and historically, oil companies pay some of the best dividends. So anyway, in this video, these are the 2 of my favorite stocks that you should seriously look at investing in. I've gone for a mix of dividend style investing along with something that is good value. So if you want something that is just a good, strong payer of its dividend, go and look at your Apples, your Coca-Colas, because there's many videos on that. I wanted to be a little bit different and find some good companies that are not really reviewed. But more importantly, in full transparency, I'm just a guy with a beard on YouTube, so you need to go and do your own due diligence, and I do not hold any of these companies right now. Now, I probably will be adding these companies to my portfolio in the coming year. It's the wrong time of year for me to start adding to the portfolio in decent size. Quite simply, not because it's Christmas, but I don't like the volume involved with the holiday period. The volume really dries up, and I think that there's a lot of unfair valuations. But that said, some of these stocks are actually good value as it is, so I am actively looking to add them. Now moving on to the first company, it is IBM. IBM are one of the biggest companies in its sector in the world. They have offices literally everywhere. They're one of the biggest employers in Budapest. And quite simply, they have a range of products. But if you don't know who IBM are, I can do a full video on them, give them a full STI. Let me know in the comments if you want that. But long story short, here's some of the fundamentals. IBM's market cap is currently sat around 112 billion US dollars. Pre-Miley Cyrus, it was at around 180 US dollars, and currently it is riding around the good value price of 125 US dollars. That said, there has been a lot of volatility and it has sort of been downtrending over the last couple of years, in fact. So IBM, please be aware of that. There could be many reasons for that. I said if you want to know more on that, I can do a video on it separately. They have been undervalued on the Simply Wall Street app. Simply Wall Street's algorithm is saying they're 22% undervalued, which is a good tick in the box because that means that they are undervalued by other people other than just myself. Their PE ratio is quite low as well, given the current situation we've seen. What was the company I just did? Peloton has an 800 PE ratio. It should be as close to 1 as possible. And IBM's PE ratio is currently riding at around the 14 level. Their PEG ratio, which is their price to earnings growth ratio, so that's their PE, including the company's previous growth, is actually very, very good as well. Closer to 1 the better, and it is actually a 1.4, which is fantastic. Really, really good PE and PEG there. If we go on to their assets and liabilities, this is where it gets a bit more risky, if you want to call it that. Their short-term assets is currently around 39 billion, and their liabilities is around 38 billion, so very, very close there. And their long-term assets and liabilities is 114 billion and 94 billion. Now, the big problem with this is their debt-to-equity ratio is what I consider quite high, 300+%. Now, bearing in mind, a lot of companies have took on a lot of debt during this situation, so I don't think there's any chance of IBM folding. But that said, it is something to be aware of, that their debt has increased substantially over the last couple of years. Now, what you've all been waiting for is IBM's stock dividend. IBM pays you currently around about 5% or just over 5% in dividends. The reason why I put it in there is it is a solid payer of its dividend, and long term, it has been increasing its dividend every single year. Year on year, the dividend is slowly going up, which is a great sign to see. Now, my advice, if you want to buy into IBM, is buy in as low as possible and as small as possible and keep doing it. For example, if you set up a direct debit on your app, your Robinhood, your eToro, or something of the similar, you can simply, allocate $20. If you're putting in $100 a month, allocate $20 every single month and keep buying IBM lower and lower. And then when you get to the sort of break-even point, only then buy on big dips. If you want to know more on how I scale into stocks, again, let me know in the comments. It's a question I get asked a lot, actually, and I'm thinking about doing a video in the new year. But I feel like I'm giving away a bit of the secret sauce to how I made my portfolio so successful over the last 9 years. So I don't know if I want to give out that information, but if I get enough comments and likes, maybe I will. Quick reminder to hit that like button there. So the first stock on dividend payments is IBM. I will genuinely be adding IBM at some point in the future to my portfolio. But again, do your own research. Now, the next company, I always struggle to pronounce it. It's Xerox. I'm going to call it Xerox rather than Xerox or however else it's meant to be pronounced, but hopefully Xerox is right. I think that's how it's meant to be pronounced. Now, Xerox Holdings is, again, a sort of data sector company. Now, we've seen the tech stocks sort of really, really rally during this whole situation, but only really your household names, such as your Apples, your Teslas. Damn, I just called Tesla a tech stock. But we've also seen the likes of Microsoft and Airbnb and these type of companies really, really go up because they're household names. Xerox really isn't a household name, and I think that's shown in the stock price. That said, I have not seen a stock fall this sharply during the whole Miley Cyrus situation. But we'll come onto their chart in just a second. Their market cap is currently riding around 4.5 billion US dollars. And like I said, it got absolutely annihilated during this whole situation. Before it happened, sack it. Before COVID happened, it was riding around $38. It then fell substantially, actually below 20, and is currently riding around that $22 mark. So if it goes just back to what it was pre-pandemic, you can see that this stock will do very, very well, and you could easily make 50% on your money. But that said, it's a long, long journey, so please bear that in mind. Simply Wall Street also says that this stock is undervalued. In fact, more so than IBM. Simply Wall Street says this is undervalued by 39%, which is fantastic because I also think this stock is massively undervalued. Their PE ratio is pretty damn good as well. It is currently at 13, and their PEG ratio is as close to 1 as you can get, really. It is currently 1.3, which is, again, great to see. There is companies out there with solid PE and PEGs. Again, I don't make decisions just on that alone, but it does help fill me with confidence when I make a position. Their short-term assets are currently riding around 6.5 billion and 3.5 billion in liabilities, which is a big tick in the box. And their long-term assets and liabilities are equally as good, with a 8.8 in assets and a 6 in liabilities. That's billions in US dollars, of course. Their debt to equity ratio is actually fantastic. Much better than IBM's at a current 89% debt to equity ratio. And coming on to what you're watching this video for, what is Xerox Holdings dividend? Well, Xerox Holdings dividend is actually over 4%. Now, I know you can get better dividends out there, but this company has a solid history of paying its dividend and has been increasing over the years. As I said, this is what we're looking for. Companies that we really don't know of that are going to continue paying dividends and hopefully increasing that over the years as well. I think Xerox is going to do very, very well. And I think that even if you just buy the lows in every big dip, like I said with IBM, just a little bit every month, you're going to get that solid return and then just scale out at the top. Again, I am really thinking about doing this video on scaling. There's a few good stocks out there that are sort of cyclical, and I think they will do very, very well. And that's sort of the bulk of my portfolio is in these type of stocks. A bit like your, Philip Morris is a cyclical trader, Coca-Cola is a cyclical trader. If you want to know more on that, again, drop me in the comments. Now, another reason why I added both of these stocks is insider buying. Now, Xerox Holdings has a lot of institutional buyers, which is great to see, because if other people are buying a stock when it's at the lows rather than selling, it's a good sign that people have over-panicked and people are trying to get a good value there. We also have some in IBM as well, but that's more of the independent directors. And the Xerox Holdings institutional buyers are actually more hedge funds and things like that. So it is good to see that we're not the only ones looking at these two companies, and other people are looking at buying this stock for a long-term hold. So I wouldn't say these two are my two favorite dividend stocks. Don't get me wrong on this video. I will say that these two stocks that are sort of flying under the radar a little bit. And if you're here, you're obviously searching YouTube looking for a good investment that pays you a dividend. There's many videos on Coca-Cola, Apple, Microsoft, who are all solid dividend payers. I just want to give you something a little bit different to add a little bit of diversification to your portfolio. If you enjoyed the video, please do smash that like button. If you're new here, subscribe, turn on the bell. I wish you all a very, very Merry Christmas, and I hope you have a great holiday period. If you do want to join the live stream, remember it's only in 2 days' time, 24th, 10:30 Eastern. Tune in, look forward. I'll be sharing a whiskey with you. Although if you're in the States, it might be a bit too early. But hey, it's Christmas. Get some Baileys in your coffee and start the day how it should be started. Take care. Happy holidays. Peace.